What's up, Mortgage Coach community? I am super pumped to interview Mike Giddens. Mike is on a team that does a lot of business. Last year, the team he's on did 300 or over 370 units. And what do you think you're going to hit this year?
We're hoping we'll hit probably 260 million. 60 million, probably somewhere in the neighborhood of 250 units. We're down this year over last year, but for Louisiana, it's still not bad.
Yeah, well, hey, helping that many families is still a big deal. And I know you help a lot of our military families. You help a lot of veterans. So tomorrow is a big day. And I would love to hear, why you're providing veterans with a total cost analysis and how you're doing it. So if you don't mind sharing for everybody.
So our branch manager is Louise Thaxton. A lot of people know who Louise is and her love of veterans, and her love of serving our military community has kind of filtered over to the branch. And there's no better product for a borrower to use than a VA. If I could do them all day, every day, I would. It's the easiest loan to do. There's just so much benefit for the borrower. Even in a higher interest rate environment, and then refinance them in a VA IRRRL, it just there's no better product. So.
Well, I think there's no better product because it is a true benefit for your service. And one of the things I've been advocating for, and I would love to figure out how we can get a little momentum in the mortgage coach community, is I've been advocating for a long time, first-time home buyers should always get a rep versus own analysis. Like, give them that financial literacy. And I'd make the case that every veteran should get a total cost analysis. It's not about, oh, you need to do it to win the loan. Although, yes, it is a sales advantage, but it's a true benefit for serving our country. And why not make sure that when the military family gets into debt, that they get the transparency of how that compares to other loan options and what that looks like over time. What are your thoughts on that, Mike?
Yeah, it's all about educating the borrower, and being in Louisiana, I always say we typically tend to follow what the rest of the country, to tail behind what the rest of the country is doing. And, there's so many veterans that have eligibility that don't truly understand the benefit they get from using their VA eligibility. And, and that's first and foremost with me, is trying to educate, okay, why should you use the VA benefit over, say, an FHA product or a USDA product? Because a lot of my competitors, they're not pushing the VA. They don't want to touch them. And, and it's just, like I said, it's just trying to get the word out and educate our community on the benefits. So, it's.
Well, let's see how you're using a total cost analysis to bring value to our veterans, and see a couple strategies and how you've been doing that lately. Go ahead and share your desktop and show me what you got.
All right. So, all right. So can you see my screen, Dave?
I can. I see it perfectly.
Awesome. All right. So the first one we're going to start with here. I received a call from a prospect, and he was inquiring about using his eligibility, but interest rate scared him off. So rather than just letting go right off into the wild blue yonder, I guess is the way to put it. I wanted to show him, okay, yes, he's not excited about rates right now. He's wanting to wait. So I just wanted to go ahead and plant the seed to show him, okay, this is kind of where we're at now, in VA, and what do things look like, and what do purchase numbers look like, if he were to wait and see rates get better. So that's kind of where I was at with this TCA. So basically, I worked this one up actually yesterday for him and sent it over to him. And we were at 6.875 yesterday, and so I wanted to show him kind of what the numbers look like. And, you know, he wanted to stay at a monthly payment of $1,500 a month. And, you know, we're fighting two issues right now here in the state of Louisiana. You know, we've seen a few hurricanes. And so our homeowners insurance has skyrocketed here in Louisiana. And so that's not only are the rates hurting us, so is the affordability of homeowners insurance. So I wanted to go in there and kind of give him an idea of what he could expect. So, you know, and like I told him when I met with him over the phone yesterday, you know, right now, you know, if he were to do something, obviously the rates are a little bit better today. You know, to keep him at $1,500 a month, we'd have to be at a price point of about $185. He does have, he's exempt from the VA funding fee, so he won't have the funding fee there. So, so I showed him what 185 looked like. And then, you know, I showed him, okay, what if we see rates get a point better? You know, that increases that price point from 185 up to 205. And then in that third column, okay, you know, if we see points get, rates get 2 points better, what are we going to look at? And, you know, so he goes from 185 all the way up to 225 if we do see, you know, a 2-point improvement in rate. So, and, you know, it kind of gave him a little bit to think about. You know, now he was thinking he was going to be more in the 7% range, you know, low 7s on an interest rate. So he was a little shocked that he was actually getting a quote in the upper 6s, which, you know, our VA rates have been better than any of the programs we've been quoting here.
Well, so I love anytime you're giving people options and you're helping them based off of what ifs. So that's a cool strategy. What else do you have?
Okay, so my second client, this guy and his wife, they were relocating from Pennsylvania. His wife works for the Bureau of Prisons, and they were coming in, they were using his eligibility. Well, they have a home to sell in Pennsylvania. Well, that sale is not gone like they had hoped. And, you know, originally they were planning on putting about $200,000 down when we did the initial loan application, gave the pre-approval letter on the new construction. And we actually met about a week and a half ago because, you know, they said, okay, it doesn't look like the house is going to sell by the time the new house is finished. You know, what are our options? And so what I did is worked them up at TCA. We actually met in person at a coffee shop. And I just showed them, you know, the client, he doesn't like debt. And we got into a situation with these two folks that they recently got married, and he didn't realize the wife had the debt she had. So we actually got into the conversation of, instead of putting the money down on the house, let's look at it, maybe getting rid of some of the other debt to lighten the debt load. So basically what I did was show them, you know, okay, we're at a $308,000 purchase price. You know, okay, if we looked at 0 down, what does a monthly note look like? And he didn't want to be over $2,500 a month. So we were under that figure. Unfortunately, we already have them locked in, so they're not going to be able to take advantage of the improvement in rates that we've seen over the last day or two. But so we were under that $2,500 mark. Well, you know, he was adamant, okay, what if we did 20% down? Showed him that, it's saving him $400 a month. But flip side of the coin, I told him, I said, look, you've got $35,000 worth of debt out here that has a, you know, monthly payments total $1,100 a month. Instead of putting 20% down, let's take that money, let's get rid of that debt. And, you know, yeah, you're giving up $400, but you're also going to save an additional $700 for a total of $1,100 a month by doing that. So that's what they've done. They've elected to go ahead and do the 0 down. Now, unfortunately, he does have a funding fee. He's never used his eligibility before, so he will be paying a funding fee, but he's still coming out better in the long run. And like I said, it all goes back to educating the client, because they don't know. They think they know, but they don't know.
Yeah, and giving them options. Any other veteran total cost analysis that you want to show in this chat?
You know, it's, as of late, it's been more, you know, kind of like the first one I've showed you. You know, people are really scared of, you know, the monthly payments right now. And, you know, obviously here in Louisiana, we are having an inventory issue. you know, so, and like I said, we're having an issue with our homeowners insurance rates. And so it's been more of an education, you know, the what if scenarios. Because like I said, they're just not the properties out there available for people to go in and to try and get that target note that they're wanting to hit. And so, yeah, it's just been more education pieces, you know, showing the what if scenarios. We don't do a lot of rent versus own here. I probably ought to do more of the rent versus own, but you know, so that's, yeah, this is.
Well, I would definitely push you to, Mike. If you could stop sharing your screen, we'll just wrap up the fireside chat mode. So first of all, man, thank you for, you know, all the advice and education you provide to all the consumers that meet with you, whether they're, you know, military or not. Like, you guys give everyone advice, but, you know, going the extra mile for VA families, I think makes a difference. I would put a push to anyone watching this. I'm looking for great stories and strategies where mortgage coaches have helped, you know, families that have the benefit of a VA loan, how they're helping them make better decisions, how they're helping them achieve wealth with real estate faster. So anyone listening to this, feel free to either do something like we're doing right now, just record on Zoom, tell the story, explain the strategy, or share the total cost analysis. Like, wherever you're watching this on social media, if you have been using Mortgage Coach to help military families with VA loans, we want to see what you're doing. We want to hear how you're doing it. So, Mike, before we close out, any closing thoughts for all the mortgage coaches listening in?
Look,
the veterans watching.
Kudos to you, first of all, for providing us this software, because I'm a big believer in Mortgage Coach. And when, you know, I've been using it for quite a while. I've really started using it more over the last couple of years. And, you know, the video aspect, I've gotten better with the video. And but yeah, kudos to you and your team for providing us such a wonderful platform to be able to educate borrowers, because I can't imagine trying to do it with fee sheets and spreadsheets like my competitors do. So
Yeah.
I don't have many competitors using Mortgage Coach here in Louisiana, thank God. So
where are you at in Louisiana?
I am in Natchitoches, Louisiana. I am in central Louisiana, and our one claim to fame, if you've ever seen the movie Steel Magnolias, it was filmed here in Natchitoches.
Oh, how cool is that?
Yeah. So
yeah, that's cool. Well, hey, I love that you're elevating the experience in the market you serve. And for all you veterans out there, thank you for your service to our country. For all you loan officers that are, you know, treating that, remember, it's not a mortgage program. It is a benefit of serving our country. And make sure folks know their options. Make sure you give them a total cost analysis, and you will win too. You know, not only will the family win that you're supporting and you're giving the education to, but you as a mortgage professional will win. So look forward to seeing those. Mike, always thank you. Louise Thaxton, if you're watching this, you are an amazing leader in our industry, and
yes,
thanks for getting Mike on the team, you know. So all right, man. Well, thank you very much, Mike.
Thank you, Dave. Appreciate you.
All right. And give this a like, share this with your mortgage friends. And remember, we want to see more total cost analysis. How are you helping veterans leverage their VA benefits and make informed decisions? So bring it on. Take care, everybody.